Hi class, welcome to part 2. We're still busy with denial of input tax and we're busy with entertainment. So continuing on that, the following things are also denied the claim of input tax, and these are vendors operating taxable, therefore not exempt passenger transport services, vendors organizing seminars or similar events for reward, or vendors who receive bets in respect of the outcome of a race or any other event in terms of section 8. Where the entertainment is continuously or regularly supplied as a prize to its clients or customers. If we continue on this denial of input tax, the following things are also denied: club membership fees and subscriptions. Input tax deduction is denied in respect of any fees or subscriptions paid by the vendor for the membership of any club or association of a sporting, social or recreational nature. For example, a golf membership at a golf club. Very important, input tax is not denied if payment is for the professional membership of an employee. For example, membership of the CASA accounting profession, in other words, SICA or CIPA accreditation. The reason for this is that the invoice for membership is issued in the name of the individual member and not in the name of the employer. As the documentary requirements of section 20 is not complied with, no input tax can be claimed by the employer. Alright, we're now moving into a motor car, and I would like to say that this is very important that you know the requirements of what is a motor car. Input tax on the acquisition of a motor car is also denied. A motor car includes the following 5 categories, and if you don't know what each of these categories are, if you don't know how a certain thing looks, I would suggest maybe just go onto Google and type these in and go to the photos tab and see what these things look like. So the first is a motor car, a station wagon, a minibus. We've got a double cab light delivery vehicle or a double cab bakkie. Any other motor vehicle that is normally used on public roads, has 3 or more wheels and is constructed or converted wholly or mainly for the carriage of passengers. Alright, so a motor car specifically excludes the following. So in other words, these things are not classified as a motor car, therefore input tax will not be denied on these vehicles. So vehicles capable of transporting only one person or suitable for carrying more than 16 persons. So this is things like a motorbike or, for instance, a bus. Vehicles with an unladen mass of 3,500 kilograms or more. We've got caravans, we've got ambulances, vehicles constructed for a purpose other than the transport of persons that do not have the ability to transport passengers, other than such as is incidental to that purpose. We've got game viewing vehicles, have a look at that, and we've got vehicles constructed as or permanently converted into hearses for the transport of deceased persons and used exclusively for that purpose. Denial of input tax does not apply in the case of a vendor who is a car dealer. If I am a car dealer, it is my business to sell motor vehicles. Therefore, the motor vehicle is my trading stock. Secondly, a vendor who runs a car hire business at an economic rental acquired the motor car for the purpose of awarding that motor car as a prize in consequence of a betting transaction, or regularly or continuously supplied motor cars as prizes to clients or customers. Alright, a vendor that acquires a motor car for which an input tax deduction is denied upon acquisition and subsequently utilizes such vehicle for the purpose of which an input tax deduction would have been allowed on acquisition may deduct input tax after the subsequent change of use of the motor vehicle. Alright, so let's have a look at an example quickly. So Mr. Silendile bought a new motor car valued at $228,000 from Van Oort and Yules Motors Incorporated in terms of a cash sale with monthly payments of $4,500. So as an additional option, Mr. Silendile took out a maintenance plan and insurance on the motor car, resulting in an additional monthly payment of R500 and R400 respectively. All amounts are inclusive of VAT. So I'm required to determine the input tax deduction claimable, if any, by Mr. Silendile. Okay, so the important thing here is that Mr. Silendile will not be able to claim an input tax deduction on the cost of the motor car. This deduction is denied because he bought a motor car. It satisfies the definition of a motor car. So he will, however, be allowed to claim an input tax deduction in respect of the maintenance plan and insurance on the motor car, as the input tax deduction on these supplies is not denied. If the maintenance plan and insurance payment were not separately indicated on the VAT invoice but form part of the supply of the motor car, the input tax deduction on these expenses would have been denied because it would have been part of the whole price of the motor car. Okay, so we move on swiftly to deemed input tax on second-hand goods. So when second-hand goods are acquired from a resident of South Africa and the goods are situated in South Africa, the VAT Act provides that a deemed input tax may also be claimed. So what they are basically saying here is that even though I am purchasing the second-hand goods, and it might be from someone who is not a vendor, it doesn't matter. I can still claim a deemed input tax if I am a VAT vendor myself. So no input tax on second-hand goods is available if the goods were acquired from a person on a diplomatic or consular mission, etc. Alright, second-hand goods are defined as the following: goods that were previously owned and used in respect of the transfer of a unit, referred to in Section 8 of the Share Blocks Control Act, such a unit and certain prospecting and mining rights. So the units that they're talking about in the second bullet point there would be something like an apartment, for instance. Okay, so second-hand goods do not include animals, gold, goods containing gold, for example, gold coins. Fixed property usually also qualifies as second-hand goods if it was previously owned and used. So all suppliers of fixed property as part of the land reform regime are, however, excluded from the definition of second-hand goods. The reason for the exclusion is to prevent claims for notional input tax on such land. The supply of land as part of the land reform program is usually either zero rated or exempt from transfer duty. So no tax-related cost is therefore associated with the acquisition of land, and the recipient of the supply is not entitled to any notional input VAT. Right, so the input tax is calculated by the application of the tax fraction to the lesser of the purchase price or open market value. So it's a very standard way of calculating it. Tax fraction now being 15 over 115 because the VAT rate has changed to 15%. Open market value is the consideration in money that the supply of goods and services will fetch if it's freely offered and made between persons who are not connected. Okay, so open market value, you guys should be familiar with the term. It's deemed, or this deemed VAT may be claimed as input tax to the extent that payment has been made for the second-hand goods. So if only a portion of the purchase price for the second-hand good has been paid, then only the same relative portion of the deemed input tax may be claimed. So I can only claim input tax to the extent that I have already paid for this item. Important to remember, the deemed input tax rule relates only to goods previously owned and used. The purchase of trading stock from a non-vendor, except for antiques, would usually not qualify as second-hand goods, as the trading stock was not previously used. So the rule that the lesser of purchase price over market value should be used in calculating the deemed input VAT does not apply to the motor industry on the trade-in of second-hand vehicles. It's not the intention of the VAT Act to deny an input tax credit on an arm's length transaction between parties that are not connected persons. Binding General Ruling 12 allows motor dealers to deduct the deemed input tax on the full consideration, including any over allowance amount paid or credited to the supplier for a second-hand vehicle traded in under non-taxable supply. Okay, so let's have a look here at the input tax on second-hand goods. So, Semunia, a vendor for VAT purposes, acquired a second-hand delivery bicycle from a non-vendor for use in its business. The purchase price of the delivery bicycle was 630 and the market value was 780. The purchase price was paid in full. So I need to determine the input tax that may be claimed in respect of the purchase. So firstly, we're not dealing with a motor car here, we're dealing with a delivery bicycle that's got less than 3 wheels, only transports one person. Therefore I should in any case be able to claim VAT input, but because this is second-hand goods, I am able to claim a notional input tax. So because the vendor has purchased a second-hand bicycle from a person not registered for VAT, deemed input tax period can be claimed for the second-hand bicycle. Right, so I need to use the lower of the consideration paid or open market value, and in this case I'm going to be using the 630. I will multiply that by the tax fraction, and that will give me the deemed input tax that I will be able to claim. Okay, so if we move on, zero rating of movable second-hand goods that are exported. So when second-hand goods are exported, the zero rating as per section 11 is not applicable if in respect of such goods, deemed input tax has been claimed by that vendor or any other person with that vendor and that other person are connected persons. So when such second-hand goods are exported, the value of the supply shall be deemed to be equal to the purchase price of the supplier. Alright, so if the supplier bought the goods from a connected person who was entitled to claim a deemed input tax on the second-hand goods, the value of the supply will be the greater of the purchase price of those goods to the supplier and the purchase price of those goods to the connected person. Effectively, the zero rate applies only to the markup. So let's just have a look at a calculation here. So ABC CC buys scrap metal from a non-vendor for 6,000 Rand and claims a deemed input tax deduction of 737. So tax fraction multiplied by 6,000. So explain the VAT consequences if ABC exports the goods for 7,000 Rand and B, ABC exports the goods for 4,000. So in the first instance where they exported for 7,000, ABC will be required to account for output tax equal to the notional input tax claimed of 737. The output tax is based on the purchase price irrespective of the selling price. However, where ABC accounted for VAT at the standard rate of 14% in respect of the total amount charged, the purchaser, if a qualifying purchaser, may claim the difference between the VAT paid and the notional input tax deduction. ABC will again be required to account for output tax equal to 737 in B there, although the selling price of the goods is less than the purchase price. The output tax is based on the original purchase price irrespective of the selling price. Okay, so what happens when we have second-hand goods exported if it was bought from a connected person? So A buys second-hand goods for 2,000 Rand and claims a notional input tax deduction of 246. Then sells them to B, a connected person, for 1,800 Rand. B claims an input tax deduction of 221 based on the tax invoice provided by A. B then exports the goods for 1,980. So I need to explain the VAT consequences in respect of the export. So B will be required to account for the output tax of 246 Rand, in other words 2,000 multiplied by the tax fraction, which is based on the greater of the price paid by the connected person, which is 2,000 Rand, or the price paid by B, which is 1,800.